Good afternoon, everybody. Diagiv. I hope you're enjoying Singapore FinTech Festival. Thank you to the Global Financial and Technology Network for the invitation to speak to you on how the Central Bank of Ireland is navigating through changes and the rapidly evolving landscape of the financial system. And in my remarks, I'll discuss the changing landscape of the financial system and how central banks need to respond to it if they continue to deliver on their mandates. And I'll also talk about the innovation we're seeing in Ireland's financial sector. But first, some positive news on inflation. As the IMF indicated last month, the global war on inflation is being won. In the euro area, the finish line is coming into view. But monetary policy is not a sprint, and like all good medium and long-distance runners, it's important to assess conditions carefully and pace yourself. And with the finish line in sight, we don't need to rush to it. In my view, a prudent and cautious approach remains the right one. One area I'm keen to see further disinflation progress is services, where inflation has remained around 4% during 2024. As it accounts for almost half of consumer spending for euro area households, price developments in services can have a large bearing on overall inflation dynamics. Focus on services inflation was in fact a common theme at the IMF meetings recently. Easing supply bottlenecks and falling energy and food inflation are driving global disinflation, but services price inflation remains elevated in many regions, and it points to the importance of understanding sectoral dynamics and of calibrating monetary policy accordingly. With goods inflation returning to trend in the euro area, services inflation closer to around 3% is more consistent with achieving our 2% target. Absent future shocks, and there are several potential risks on this front, not least from geopolitical developments, inflation is expected to sustainably reach our 2% target during 2025. But we should take time to reflect on the extraordinary circumstances that monetary policy has had to manage since the global financial crisis. A period of very low inflation, followed by the closing down of economies and the prospects of deflation, then the return of very high inflation from the disruption of supply chains, and a war-induced energy shock, and now a relatively rapid process of disinflation. I expect a fragmenting global economy undergoing significant transitions in demography, in technology, and in climate to mean that volatility and uncertainty will reflect a new normal, posing challenges to all economic policymakers. The reality, of course, is that the pace of change in our economy and financial system have been accelerating rapidly since the financial crisis. It has required central banks, regulators, firms, and consumers to adapt, transform, and evolve to meet the challenges that it poses. The Singapore FinTech Festival showcases and highlights the sheer breadth and depth of the innovation that is happening in financial systems across the globe and gives policymakers an insight into the future. Since the latter stages of the 17th century, when the world's oldest central bank, the Sweden's Riksbank, was founded, price stability, mitigating crises, and stabilizing economies have represented a central bank's primary mandate. And while change and challenge have been constant throughout the history of central banking, the challenges and changes that we face today are more complex, more connected, and more multifaceted than ever before. We're living in a world of unprecedented innovation, change, complexity, and uncertainty. In the past 5 years, we've endured a global pandemic and witnessed Russia's war in Ukraine and its people. We've also seen an escalating conflict in the Middle East and an increasingly uncertain geopolitical environment. The breakdown of a rules-based world order, the risks posed by, at best, reduced interconnectedness and, at worst, a preference for autarky and the prioritization of short-term national interests over the common good, all add to the sense that the changes we're seeing feel different and not in a good way. At the same time, as this changing geo-economic landscape, the financial system, both in Ireland and globally, has been undergoing its own rapid change over the last number of years. In particular, technological innovation has had a profound impact across all aspects of our lives and the provision of financial services is no different. Technology is a key part of the financial services landscape today. And while the change so far has been significant, in many ways it feels like just the beginning. All of this adds to my growing sense that the pace of change we see and feel today in financial services, combined with the uncertain and challenging environment, makes change in the present very different than change in the past. This, no doubt, creates an enhanced sense of unpredictability, and for some, perhaps a sense of anxiety. So I suppose the question is, how do central banks navigate through this change? And navigating change is complex, but sometimes to overcome complexity, you need to seek simplicity. And while it's important to be adaptable in times of rapid change, central banks should also remain anchored to the fundamentals and remember that no matter how novel or innovative something is, the basics of good governance, good risk management, and delivering in the interests of consumers, investors, and the wider economy remains the same. From a regulatory perspective, I've spoken before that to achieve positive outcomes, the necessary foundations or principles must be in place. Our approach at the Central Bank of Ireland is underpinned by 6 principles. Regulations must be forward-looking, connected, proportionate, predictable, transparent, and agile. While these principles are general, I think they are increasingly relevant to meet the challenges of today, as well as the opportunities and risks that a rapidly digitalizing financial sector is bringing in the near future. It goes without saying that we need to be forward-looking to ensure we can continue to deliver in the pace of rapid change. And in a world that is fragmenting, it is all the more necessary to be connected with peer regulators, with industry, and with our citizens. Being proportionate means harnessing benefits while mitigating risks. It doesn't mean compromising on our fundamentals, which are even more important in times of rapid change. Predictability and transparency matter for the industry, but also for the regulator. If we are predictable and transparent, then regulated entities will be able to deliver on our expectations, even in times of uncertainty. And finally, agility is something not often associated with central banks. But I would say we have demonstrated a great degree of agility in the response to the numerous shocks of recent years. And in the face of rapid innovation in the financial sector, I think embedding that agility into business as usual, rather than only in crisis situations, is essential. These principles underpin our wider approach, and I believe will serve us well when facing into the changing and growing financial system in Ireland. And let me just take a moment to assess some of the innovation we've seen in Ireland. The size of the financial sector in Ireland has grown at pace in recent years. Ireland is seen as an attractive location for financial service providers to operate in due to our membership of the European single market, having an open and very connected economy, a highly skilled workforce, predictable government policies, and a transparent regulatory environment. And some of the examples of the changes we've seen in the financial system include a 4-fold increase in the growth of authorized payment firms. We've seen big tech and small tech grow in the financial space. We're experiencing rapid change in electronic payments and consumer demand for instant payments, and we're watching firms develop new and innovative technology-driven business models, such as payment firms partnering with other financial services firms, such as credit providers, to offer a combined payment and credit solution to merchant clients and consumers. Firms' efforts to target these consumers are facilitated by open banking, new cloud and blockchain-based technologies, as well as enhanced data analytics. And FinTech Festival goers will know exactly what I'm talking about. All this is to be welcomed, and these new products and new delivery channels are providing greater choice, as well as bringing new consumers into the financial services system. However, we're also seeing concerning developments like technology-driven new products in the crypto area, which do, in some instances, raise serious questions around sustainability and concerns relating to consumer and investor protection. But the picture and the trajectory is clear. Technology is driving significant change, and new entrants will continue to innovate, disrupt, and challenge existing market participants to progress technology transformation as a strategic imperative. So how are we working towards anticipating and dealing with all this? A central theme of the strategy at the central bank is being future-focused. Among other things, we want to anticipate, support, and manage the risks of innovation in central banking and financial services, while ensuring that innovation is harnessed for the public good. And as a result, technological innovation continues to be a key focus for us. We want to better understand the opportunities and risks for consumers and the economy. And it's one of the reasons why we've enhanced our innovation facilities with the establishment of a new sandbox program, so that we can remain agile and forward-looking by learning and developing a deeper understanding of the ecosystem. And this new engagement will enable us to anticipate and to support innovation in the financial sector, to deepen our understanding of innovation, and to better inform our regulatory approach. We'll continue to work closely with our regulatory partners to ensure the necessary guardrails are in place to balance innovation with financial stability. And we must ensure that new technologies benefit society while mitigating potential risks. And it's through open dialogue, constructive collaboration, and a shared understanding of the challenges and opportunities that we can foster an environment conducive to innovation that enhances the well-being of society as a whole. Two of our priorities next year at the central bank include the implementation of the EU's new Digital Operational Resilience Act, as well as the implementation of the Markets in Crypto Assets regulation. We'll also next year continue to strengthen our capabilities, in particular around artificial intelligence and tokenization, given their likelihood to be the next significant widespread technological development in the financial system. One area that is clear is the need to modernize our payment systems and improve their efficiency, in particular in the world of cross-border payments. And I'm a firm believer, reinforced by my visit to the FinTech Festival, that the future lies in harnessing digital technology. This does not mean that we have to abandon the banking system and the money system that we are familiar with, but it does mean that central banks need to ensure that they keep up with the digital age and ensure that public money is available in a digital form. Which brings me to the digital euro. A digital euro would be a digital form of cash issued by the central bank and available to everyone in the euro area. A digital euro would go hand in hand with banknotes, providing for free an all-in-one digital payment option across the euro area, and it will blend the simplicity of cash with digital convenience while maintaining the highest levels of privacy. And I see it as the logical next step for our single currency. The final decision on whether or not to issue a digital euro will only be taken once European legislators have defined its legal framework. The financial system, at the end of the day, the financial system must remain primed to adopt and reap the benefits of innovation generally, including the digital euro. So let me conclude. We live in uncertain times, perhaps turbulent times, but central banks need to remain anchors of stability during such times. That does not mean we need to wait for calm before we move forward. The challenges facing central banks are complex and multifaceted. Effective strategies rely on the interconnectedness of regulators, firms, consumers, and the financial ecosystem. But they need more than just better communication. Our collective regulatory response to the changes in the industry will shape the next decade, so we need to think holistically about regulation, how it can ensure financial stability, build resilience, and support effective innovation that delivers positive outcomes for citizens. Well-designed rules leads to stronger financial services firms, and stronger firms are better able to serve the needs of consumers, households, businesses, and the wider economy. Thank you very much.